I'm going to begin with you, Rich, because I'm a little confused. My notes on the one hand say that you said where to put new money to work, still favoring growth over value. Then in another place, my notes say where to put money to work. If you believe this economy and are risk-tolerant, international equities represent some of the best buys. If, on the other hand, you're more risk-averse, remain cautious and diversify across domestic equities, tilt toward value and defensive names. I'm confused. Am I supposed to go growth or value domestically or international? What?
Yeah, well, you're supposed to diversify. And the specific answer, to be honest, Tyler, is going to depend on who you are, your idiosyncratic objectives and goals, where you are in the life cycle. But in the shorter term, tech stocks, particularly in the U.S., it's a Goldilocks economy right now, not too hot, not too cold, stable economic growth, stable interest rates or lower interest rates. This is perfect for tech stocks. Now, if the economy heats up, interest rates and longer-term bond yields move up, we're going to have to switch from growth to value. So it's a very dynamic position to take. We are not betting on stocks overall right now, or at least not deploying new money into equities. But where we are currently is overweight growth, and in particular tech, over value stocks.
Brad, last year, a lot of the reason equities were higher had to do with the expansion of multiples, people being willing to pay more money for each dollar of earnings. Do you think that this year will be a repeat of that, or will the market levels be driven more by fundamentals, i.e. earnings, profitability, and so forth?
I think we're back to fundamentals because you're quite right. On a valuation perspective, we're at very high levels. We're not going to get the kind of multiple expansion we saw last year. What we are likely to see, though, is you're seeing earnings start to come back. You're seeing consumer confidence bouncing back. You're seeing business confidence bouncing back. In other words, we've had a lot of headwinds in here, and as those headwinds are letting up, we're actually starting to see growth accelerate. And I think if you look at, for example, housing, you see that. New home starts are at the highest level since, I think, 2007. That's remarkable. When you look at retail sales growth year on year, it's at about the highest level we've seen in the past couple of years. There's a real rebound going on with the economy, and that's going to help the top line and the bottom.
You know, Rich, I was just looking at that 10-year on the screen, still at 1.6%. And, you know, if we hadn't already talked the disconnect to death, it would seem odd that it's still so low. So I guess I'll put that aside unless you want to address it and ask if there's anything that you would warn people about with this bubble kind of move in Tesla. You look, if this continues to correct downwards, does it pose a risk for the market?
Oh, potentially. Yeah, there's a contagion there psychologically, if nothing else. But corporate earnings, I think, is what we're focused on right now. It all boils down to corporate earnings. There's no question the consumer has been resilient throughout the last about 10 years, arguably, right? Real personal disposable income, real personal consumption expenditures, steady and strong and resilient. But can that transfer over to the corporate sector? Fourth quarter earnings not showing very well. Okay, if we can't get earnings growth in the double digits this year, the PE expansion from last year has already moved the market up. It's still a tough call as to whether the market's got real growth from here without earnings coming through.
Brad, let me just bring it back to you as you were talking positively about the housing market and citing low rates. I mean, how much longer, if all of these things are going so well, can that interest rate remains so low? And if it starts to come back a little bit, is that a risk to the positive developments on the housing side?
I would say that we've been talking about interest rates have to increase for how long now? Decades?
Yeah.
And the fact is they have not come back. So, you know, the argument that interest rates have to come back, first of all, I would say at best it's not proven. You know, when you have the Fed out there saying we're going to keep interest rates low, when you have, they're talking about capping interest rates. And so I look at that and I say, yes, if interest rates go up meaningfully, that will be a slowdown. But then if you look at that, when you look at valuations and rates, they're actually positively correlated. That would say things are doing great. And that would actually be good for the market and the economy because it would mean we'd started to see growth take off again.
So why, gentlemen, did the market come back as sharply as it has these first 3 days of the week? Rich?
Well, a couple of good economic reports, a sigh of relief from coronavirus, although, you know, American Century is partially owned by the Stowers Institute for Medical Research. We wouldn't count the virus out yet. Market seems to have shrugged it off like a common cold, just spray a little Windex on it. But we're not so sure you should count it out quite yet. But economics seem to be coming through. There are some good reports, obviously the ADP report, the ISM. That seems to be the relief rally right now.
Brad, same question for you. And does politics have anything to do with the rally over the past couple of days?
I think it does. And I agree with what Rich said, but I would put it a little bit differently. We've seen a bunch of different fears coming in here. What's going to happen with impeachment? What's going to happen with the virus? What's going to happen with Brexit? Because remember, that just happened a couple of weeks ago. And all of these things that have been rattling the market for a long time, and the market was pricing in, yes, it's going to be the end of the world, and every single one of them is rolled over, and the world hasn't ended, so how long can you stay terrified? So I totally agree. The virus, we got to keep an eye on that. But the emerging data is the mortality level is actually quite low. Yes, we're getting more cases, but is that because we're actually watching it more closely? I think we're going to control this, and if we don't, we'll know it, and then we can react.